Hi guys, this is Hector. Today is Saturday, so I'm not actually going to record any live video. Of course, the markets are closed. I've just opened my my charting platform in order to see how the markets closed down yesterday, Friday, for the weekend. And well, once again, I can see that some heavy profit takings took place in the second half of yesterday, Friday, meaning, during the afternoon London time and throughout the whole New York session. As you guys know, one of my golden rules of sensible trading is to be very careful when it comes to trading on Fridays, especially beyond the noon hour in London. Okay. The reason as of why I dislike trading so much on Fridays is because I've noticed throughout the years that some heavy profit takings do happen, okay, and especially in trending markets, which is the type of the type of price action I like to trade myself. The reason as of why that happens because large players, institutional players who've been profiting throughout the week, who've been holding an open position throughout the week and cashing some money. Before the weekend, they usually decide to close down their positions, and therefore we usually see some heavy retracements on any trending markets. Okay, in this case, I'm showing you the New Zealand dollar against the Canadian dollar. Which is been probably one of the best trending currency pairs throughout the week. Okay, so you can see throughout the week we've been clearly making higher lows, okay, and also higher highs, which is basically the definition of what a trending market is. Okay. Clearly an uptrending market throughout the week. Okay, this is Friday's price action, this is Thursday, this is Wednesday, Tuesday, etc. Okay, so as we can see, every day we would make a higher high, okay, until this precise time, which is exactly 2 p.m. London time. And from there, have a look what happened. The New York market opens up and price, well, basically dropped about 130 pips to be exact, against the trend. Okay. Like I say, this is a very typical phenomenon that I have been noticing throughout the throughout the years, and it just makes sense. Okay, imagine you were a large trader, someone working for an institutional investment bank, or any large trader, someone the people who actually have got the capacity of moving the markets. And imagine you've been long throughout the week, okay, at any time throughout this uptrend, making some money. The last session of the day, meaning the New York session, open up before the weekend, before the markets close for the whole week. And considering you've been profiting, you've been making perhaps you are 100, 200 pips in profit throughout this trend. Like I say, the last trading session for the week open up. What will you do? Will you keep your position open throughout the weekend, which is always a risk, or will you actually close down the position, cash in some money, okay, scoring some nice profits for the week, and basically not incurring on the risk of keeping a position open throughout the weekend? Well, of course, most of the people will definitely close down their positions, okay, and therefore price sees a heavy retracement to the downside. Okay. Now, breaching the dynamic area of support, in this case, since we're in an uptrend, which is, like, as you guys know, the area I like to keep an eye on. Anything that in a trending market, anything, as long as price keeps above the area between the 30 and the 50 simple moving average, I consider that we are still in a trending market. One price breaks down in momentum, nearing the territory of the 100 moving average, which is the one in blue, well, as far as I'm concerned, the trend is in danger. Okay. Moreover, we had a trend line breakout. Let me clean up the chart a little bit. We had this trend line throughout the week. Okay. and it gave way right there with a breakout pullback continuation signified by that green bar. Once the trend line gives way, we had a small pullback, once again signified by that small, perhaps a dodgy spinning top, however you want to call it, against the trend, and from there, bang, it plummets in the direction of the breakouts. Okay, like I say, that happened about at about 2 p.m. London time, just as the New York market was opening, and that's why I usually like to stop considering any trade at around noon London time. If by the time if by the time we are nearing the open of the New York session, I still haven't gotten a sound entry, I usually stop considering any possible entry. I actually don't look at my charts anymore. Exactly because of this reason, okay? Because of these possible heavy retracements against the trend, okay? Or again, as those institutional traders close down their positions, well, this massive spike down is always a possibility, okay? It's something that I've noticed, quite a number of times. In fact, I'm sure if you scroll down, if you scroll back in your charts, spot a healthy trending week. Sorry, I had to pause the video. I got a phone call. As I was saying, go through your scroll back through your charts. Try to spot healthy trends, okay, through intra-week trends, and have a look at what happens during the second half of the London session. You will see that sometimes you get this type of price action, okay, a nice trending week, and as the New York session opens, bang, 100 pips to the downside, okay. That's always the risk when it comes to trading on Fridays, and like I say, that's the reason I pretty much don't like trading that day at all, okay? Alright folks, that's all, just a quick video. Perhaps I thought you would find it interesting. Bye bye.